Synthetic identities, an evolved fraud tactic born from traditional identity theft, and it's costing consumers, businesses, and banks millions. Is the industry ready to combat these growing fraud challenges? How can we leverage existing and upcoming technologies to protect against attacks? And who should be accountable for fraud losses? Most of us are familiar with traditional identity theft, the misuse of stolen credentials. In fact, it was accountable for 11.6% of all fraud in 2022. While this concept isn't new, the current technological landscape presents even more opportunities to steal data than ever before. For banks, the challenge lies in ensuring that those accessing accounts housing sensitive information and funds are the legitimate owners.
But at the end of the day, you want to make sure that whoever is accessing that account is the owner of this account. And with all those digital channels available in mobile devices, it's really tricky.
The growing number of consumer devices and credentials offers fraudsters endless opportunities to target and exploit victims. And identity theft cases are reaching new highs.
20% of our global sample of 50,000 consumers reported being a victim of fraud in the past 3 years when we asked in 2022. That's up from 16% in 2018, and that's consistent growth we've seen year on year.
Fraudsters are also becoming more sophisticated in how they leverage sensitive data. Increasingly, they combine stolen credentials with fabricated information to create a completely new identity, known as a synthetic identity. These synthetic identities are then used to set up new bank accounts, apply for credit cards or loans, and to make fraudulent transactions that are notoriously difficult to detect and are detrimental for consumers and businesses.
And setting up new accounts in financial institutions requires a lot of controls, which go as know your customer or onboarding processes. Definitely the criminals will try to bypass those controls. So we're going to see a lot of fraudulent activity that's called synthetic identity or fake identity, because that's what criminals need to do. They need to somehow pass through those onboarding processes.
The rise in identity theft and the creation of synthetic identities poses a very real risk to the individuals and entities involved. To stop criminals in their tracks, the strengthening of the customer onboarding process will help prevent fraudsters setting up new accounts with these stolen or synthetic identities.
So those financial institutions, they need to have stronger onboarding processes. They need to make sure they fully understand who is that person that is creating this account and what's the intended usage of this account.
And thorough account monitoring is required to put a stop to those fraudsters who have already slipped through the cracks and managed to bypass these stringent onboarding checks.
So having a good control of the accounts you have and the new accounts as well as the dormant accounts in your financial institution is key for helping mitigating the problem that everybody is struggling with authorized push payment or real-time payments fraud. From a controls perspective, the activity in the account will be another good indication as well. So it's very straightforward to look at an account that didn't have much movement for a while, and then an incoming transaction or multiple incoming transactions are just reaching that account, and very quickly there's a tentative to move that money out. And that's where it needs to be stopped. If you stop it at this point, you basically kill every effort that the criminal has done up to this point.
But shifts in existing and upcoming technology are pushing the boundaries of fraud detection to new limits. One such technology is behavioral biometrics, which can be leveraged to verify that an individual attempting to gain access to a bank account is the legitimate owner.
What's working well to avoid account takeover is using behavioral biometrics. And that is about using technology to identify if the person is really the person, that in addition to the device itself. And the behavioral technology is looking at how a user uses the device
In the case of a synthetic identity, you basically make sure that the interaction that you're seeing from a device is typical of the interaction of a real person and is not of the interaction with a bot that's replaying amounts and is cutting and pasting information. For instance, if you interact with a browser, you can see if a password is being cut and pasted to the browser, or whether it's manually entered, and whether it's entered by a person or it's entered at a certain static speed by a bot.
Another technology that's being leveraged to defend against fraud is machine learning. Through training, this can automate the detection of typical fraudulent patterns and behaviors, flagging suspicious activity through intelligence-led fraud signals.
At the end of the day, the machine learning will share what we call risk signals. So those signals, once they are shared, they will help the financial institution that is on the initiating end to have some perspective of that account on the receiving end.
Led by this data and the intelligence derived, banks are better equipped to take seamless action to prevent the fraud attempt from happening. For example, they can push necessary verification prompts, such as push alerts, without creating friction across the customer's banking experience. It's clear technologies like these are paving the way to a real-time defense against real-time payments fraud.
If someone captures someone's identity, they normally not get all the bits of an identity. So they get things like maybe your passport number, they get your date of birth, they get your address, but they don't necessarily also have all the devices that you interact with. Then you can use messaging to reach out to the primary device of the customer, combined with biometrics to send, for instance, a push alert to the trusted application of the bank, for the customer to verify that they do want to do that loan and they do want to make that address change. The same with when you have synthetic identities. Again, you wouldn't have a fingerprint that exists from that user yet, and you can very quickly establish if you have an interaction with a bot or there's an interaction with a real person.
To outsmart criminals, banks are going to need to combine the data from these technologies with their existing customer knowledge to make accurate and frictionless authorization decisions.
In the future, the way we would protect against identity theft is to use all the tools in the toolbox at the same time.
We're talking about machine learning or artificial intelligence that should be able to leverage the knowledge that all the financial institutions have, and by empowering the collaboration between them, make sure both financial institutions, the one initiating a payment and the one receiving a payment, will have everything they need to make the most accurate decision. And the most accurate decision is to stop criminal activity without impacting the real customers or creating any friction.
Real-time payments come with a real fraud risk, but it's clear that the industry is shifting gears to build strong prevention and advanced monitoring, to better arm banks with the tools to protect against this growing criminal activity. Staying one step ahead is the only way to beat fraudsters at their own game.